All right, so this one's going to be interesting. I got a request to do an analysis on XLM, stellar lumens. And I've never done an analysis on this, but I can already see right now it looks very similar to HBAR. So I thought I would do this fresh, okay, completely blank chart, and just get some stuff annotated and give you my thoughts, right? So I'm starting out on the 3-month, and I'm looking at XLM using the KuCoin chart. I could have went to Bitfinex, but I'm just looking for the oldest price action I can get, and both of them went back to 2018, which is fine, okay? So I'm gonna start by looking at this area of price action here. The main thing I want to see first is what imbalances have held and which ones have failed, because that will give me like a push-pull type of understanding of who was in control, why were they in control, and why did they fail. And I really like how we formed this imbalance to the downside. All right, so this was a bearish imbalance here, and I'll just zoom in on that and show you some stuff. So we formed this bearish 3-month imbalance, and I'm going to jump into replay and show you the reaction from that right here. So at one point this was extremely bearish, okay? Price could have easily went really bad from here. You see this candle right here that actually tested the imbalance. Look at how we went above the imbalance at one point, but during that 3-month span we went all the way back down. Not just back into the gap, but we actually closed outside of that imbalance. That's extremely bearish. With that, the natural expectation is to see price head down to the external liquidity, which was below this swing low at exactly 7 cents even. Okay, so that was the natural expectation for price's next direction. But here's what happened. If I go to the next candle, yeah, I don't understand why I can't just jump to the next candle. I'm just gonna try that again. If I go to the next candle, you can see how price opened up and it just tapped the gap before closing back into the range. Now, if I was looking at this, I would be measuring the wick of the previous candle, right? That long wick, and I'd want to get the midpoint of that because algorithmically, that's a natural resistance. You can see how price didn't even get near it during this 3-month quarter in 2023. Going to the next candle, okay, I'm not really liking the replay right now, but I'll just show you like this. Going to the very next candle, you can see how price went a little higher than the previous month's high. We actually got to the midpoint of that long wick and closed below it. All right, there's our resistance playing out. And then right here, the quarter of April in 2024, during that quarter period, price drops. This was when I would have been expecting price to go below 7 cents. But look what happens. Instead of going below our external liquidity, we ended up closing, going a little lower the following quarter, and then boom, big spike. But we failed. We failed to follow through on this 3-month bearish key level. So with this imbalance, you would have been expecting price to go from internal liquidity, which is the gap, to external liquidity, which is the low, because this is the low that took you into that inefficiency. The fact that we did not do that let us know that there's strength in the market for higher prices. And by strength, I'm not talking about buyers and sellers. Strength is the wrong word. It's algorithmic. So the fact that we did not follow through is a means of a reversal. Okay, and this is exactly what happened on HBAR. All right, I'm not going to go over to that chart. This isn't an HBAR video, but you can see the HBAR video that I just posted if you want to see that. Here's what's also important. Now that we have reversed, we ended up closing strong above the fair value swing high. Okay, so the high that went into that gap, and look at how strong we closed off of this. Trades like this are the ones that I take on the 5-minute when I'm day trading futures. When I see that strong close above a fair value swing high in the other direction, I'm going long on this all day. So with that being said, I'd be keeping an eye out for the next buying opportunity, right? So on this 3-month level, you can already see currently we have a bit of a crucifix candle here, even though we still have until the end of March until this closes. The structure looks very similar to Bitcoin, right? Bitcoin looks exactly the same right now, where it's possible that March closes just like you see now, where this current quarter has a small body, small wicks on both sides, and price could easily drop below this current candle and then go higher. That's what I believe Bitcoin is doing. And if so, most of the market will follow. Okay. So keep an eye out on this current quarter to see what that candle body looks like in terms of a full closure. Again, I just want to illustrate what that would look like. And this is a hypothetical. Let's say we were to close just the way we are now. Going into April, that candle, that next quarter, during the April, May, June quarter, price could drop. And in order to get into this imbalance, it would need to go below 25 cents. It would need to go below 25 cents just to get in here. And then I would anticipate higher prices, okay? Why do I anticipate higher prices? Well, because we've already invalidated the opportunity to go lower. So if we're not going lower, then we are likely looking to go higher. Now, I am expecting Bitcoin to see 89,000, and that could be, and I'm looking for it to happen after March, okay? So that could be when this thing goes in here and then goes higher, all right? Let's see what's on the monthly, if there's anything relevant there. So on the monthly, you can see we are testing a very large monthly inefficiency. And right now we are respecting it, right? But we still have 23 days left. Literally, February just started. So we'll have to see how this closes. But just remember, even though this looks like a bullish gap that may hold and go higher, you want to remember that you have a 3-month that price may want to work off of. And of course, that's after we have it confirmed, right? Because who knows, over the next 2 months, this may not even be a gap anymore. Price may be already at, 60, 70, 80 cents. We don't know. But I'm saying right now, just keep an eye out on the 3-month and remember there could be a new imbalance forming there that may want to be used. All right. That's it. I think that's all I can see here. Yeah, keep an eye on the monthly. So we'll see how February closes. Yeah, I mean, everything else looks like it's going to stem from the monthly or the 3 months. So I will take a look at this again on the close of February. And if anything sticks out, I'll make an update. But XLM right now, definitely bullish. If you're looking for another buying opportunity, it'll be below February's current low. So at the time of this video, we're at 25 cents, like 2588. Definitely, if we make a new low in February, that's a buying opportunity. Keep an eye out for that. Again, this drop was from tariffs, right? I say again because I keep saying that in every new video. Tariffs kind of hit everything. So if we get a new low under 25 cents, that is a buying opportunity. But definitely keep an eye on the 3-month. Hope you enjoyed this. I will see you in the next video.